Welcome to the show, everyone. I'm super excited to have on the show today Jeff Booth. He is an entrepreneur who has started multiple companies, including one which grew to a market cap of over $500 million. He's a tech thought leader, and he is the author of the book, The Price of Tomorrow. Now, there's going to be a link down below where you can follow Jeff on Twitter and buy his book if you do want to learn more on today's topic. So today we're going to be discussing inflation, deflation, the fiat Ponzi scheme, and how Bitcoin fits into all of this. And as always, if you do enjoy this content, then please leave a thumbs up, leave a comment down below in the comment section, and share this video to help it be seen by more people. So without any further ado, Jeff, welcome to the show.
Thanks for having me, Lark.
I'm super excited for this chat. I mean, what's going on right now? I feel like, you wrote this book and then all this stuff happens and it's like, wow, that was very prescient, a topic to be discussing. So we're going to be really diving into a lot of really what you talk about here in the book and some of the other ideas you've brought forward and kind of just unpack all this for everyone here. So I want to begin the conversation off with this thought. Why is deflation key to an abundant tomorrow?
The best way to say that is gravity, anyways. The overwhelming force today, bigger than anything else the world has ever seen, is the rate of technological change, right? And that change, if you just think about it in a first principles way, technology drives efficiency, and that efficiency drives price reductions, right? And that in itself is deflationary. So deflation isn't a bad thing. We've grown up to think it's a bad thing, right? Because we've lived in an inflationary monetary policy, inflationary world. So we can't even see that it might be a good thing. But deflation at its core, if you just think, what is deflation? It's when your money gets more valuable because goods and services go down in price. And so I'm sure none of your viewers or listeners want to give up their iPhone, right? And you can see the deflationary force in that, right? And the power, the abundance you get for less. You don't buy cameras anymore. You don't buy maps anymore. You don't buy, it's your AI assistant. It's your information assistant. It is staggering how much more power we get in that for less. That's the natural order of things on technology. And that's doubling its rate every 2 years or so as it's advancing across society. And that power is up against central banks trying to stop that from happening because we've lived in an inflationary environment. And so those two great forces are so powerful in our lives right now. And it's driving everything else. The inequality, the rise of the divide of politics, it's driving everything else. When deflation itself isn't a bad thing, I'm sure, why wouldn't we want more for less?
That's a great question. Why wouldn't we want more for less? And it really boggles the mind to see some of the policies that are being put forward by central banks. I mean, the solution always seems to be more stimulus, more bailouts, more money printing, and taking on more debt. I mean, it's just such a mystery to me why this is the only solutions they ever come up with. Why do we see this only being the solution? Is it just because when the only tool they have is a hammer, everything looks like a nail kind of situation?
They're caught, and the whole world is caught. But I would say it's not bad people. They're stuck in a system that they can't see. It's similar to, this is why it's easy to see in business. And so in business, we all know the story today of Blockbuster, right? And Blockbuster, instead of seeing how fast technology was changing and buying Netflix for $50 million when they could have, they chose to miss that, right? And at that time, Netflix was a bad business, right? It was a mail order business. But they didn't forecast the change of technology where you'd be downloading movies in real time, and Netflix business becomes massive, and their business, with all of its attendant costs, is stuck. And the only thing they can do in that world is put candy aisles in their stores, right? And we laugh. But if you actually take that analogy and apply it to what's happening in central banks and everything else, it's exactly the same thing. The existing structure can't see how fast technology is changing and what to do about it. So what they do is they try to they try to drive more on top of the existing structure. It's exactly the same thing. And so that existing structure, if you look over the last 20 years, it's actually, the evidence is everywhere. Interest rates keep coming lower and lower and lower, right? And it's taken $185 trillion before COVID to create worldwide $185 trillion to create $45 trillion of economic growth in GDP. And so more and more debt becomes, if you assume debt is only pulling demand forward, because then you have to raise taxes to pay for the debt. So if you add more and more debt, then the debt itself becomes unpayable, right? To a point. So just if you looked at the logic of that, 185 trillion, 46 trillion, looking backwards, looking forwards, because technology is exponentially deflationary, it gets way worse. And that's what we're seeing. But they're caught. And they're caught because if you allow deflation to happen right now, the debt unwinds. The debt becomes unrepayable, right? Really, it's unrepayable anyways.
Mm-hmm.
Right? But if you let that happen, it causes a depression. Right? There's a massive depression as debt gets wiped out. New winners, new losers, and it looks really bad for a time while you purge all the excesses of the system. And so instead of allowing that to happen, they're trying to stop. The central banks are trying to stop that from happening by more debt, warping the rules of capitalism by kind of socializing losses and giving riches to more, which is creating inequality. They're not trying to do it by hurting people, but they're hurting people, and a lot of people. If you looked at the second order consequences of it, but they're just caught. And just like Blockbuster was caught, just like Kodak was caught, just like they can't see how fast technology is moving and how there's a better way to design things.
So I like the analogy. Central banks have become the Blockbuster video of finance. Now, what we see happening right now, do you feel like this is a watershed moment? I mean, take the United States as probably the prime example because they're the worst offenders at the moment, but we're seeing just unbelievable amounts of money being put forward here. You know, trillions upon trillions upon trillions in stimulus. The debt's increasing at a massive rate, and how long can they keep kicking the can down the road? I mean, there's going to have to be some moment where they say, okay, we have to pull the Band-Aid off now and deal with the pain for a minute. But that pain could be really devastating.
So I don't suspect they're going to see it that way. I think they're going to keep doing it. So again, what they should do, if you said how could you make this and try to drive this to a peaceful transition? Right. That's why I wrote the book. I unfortunately feel it's getting too late in the game for that, and it's going to take. So they're going to try to stop deflation at all costs as technology keeps driving across industries, and trying to give us more for less everywhere. And by trying to stop that, they're going to push up asset prices, stock prices, house prices, education prices. They're going to push up, and they're going to push way more wealth into the asset owners today, right? So the divide has never been greater, but this isn't just the U.S.; it's all over the world. Mm-hmm. The divide has never been greater, and that rise is creating, on the other side of it, socialism, right? And so political parties on both sides are screaming at each other in the middle with no clue that neither of them is talking about an answer to the problem. They're both on top of the existing system, and so you get socialism saying, let's give UBI to everybody, and saying and political parties dividing and everything else. And where does the UBI come from, right? and so there's too much debt in the world, and it's already and it can't be repaid anyways. Putting more debt on top of that is not going to solve it. The book was written before COVID. And I specifically put into there, and I said, I like the housing crisis before. People say it's the housing crisis. It wasn't the housing crisis. It was debt. And when debt got too big and you couldn't pay back the debt, you had to paper over the debt and create winners and losers and warp capitalism. And so people are pointing at COVID now. It's anything, any event puts a pin in the balloon, and the balloon it goes the other way. And that's where we are in the cycle. So by kicking the can down the road, we make it worse and worse. But the real pain is the pain we're causing for society. And 99% of the people have no idea what's coming, right? They think that inflation is a good thing. Let's keep going. And they don't know that they're being divided by political leaders as well, right? Not understanding the first principles of what's happening.
And so the more and more we see this inflationary forces continue to roll out, because that seems to be the answer that we're getting from central banks, it's what is the long-term impact of really just seeing nonstop inflation, nonstop debt? I mean, it just continues to bring the prices, everything up as time goes on in terms of, the actual dollar value of things, but those dollars become worth less and less over time.
Yeah. So what's the end? Eventually, it's going to. So if they keep that up, eventually people lose faith in currencies, right? And you have massive hyperinflation, right? That won't happen for some time. Deflationary forces are too big. But at some point, governments could just destroy it at some sort of number. When people lose faith in the currency, bam, it's over. And that unwind, there's a lot of people, I think, that that wealth destruction, people's cash, is so. Look at countries where it's experienced. If you owned the best stock in Venezuela, and they had 4 million% inflation rate, you can't buy a loaf of bread, right? The Weimar Republic in Germany, but countless countries that go through this. What's happening right now in the world is all countries are going to go through that. And the other way, if they don't go through it, they're going to go through it in a different way, through revolution, right? Because when you drive so much wealth inequality and most people have nothing and they can't hope for tomorrow, and a very small people at the top have everything, it resets in a different order. So I hate having these conversations, because this part of the conversation, but these paths are inevitable. They're coming right now.
The game can only be rigged for so long before that constant rigging of the game, those chickens will come home to roost at some point. You can't continue this malfeasance forever. And it's an absolute just devastating tragedy what is being done to the economy, because while a small minority are able to rig the rules in their favor and continue to amass the greatest wealth transfers in history have happened in the last 12 years. 2008 was one of the first big ones, and this one that we're seeing now in 2020 is unbelievable beyond belief. And those economic moves have real world consequences for people on the other ends of these financial weapons. This is in a way almost like financial terrorism, what we're seeing with the economic situation.
So let's go down to, you're right, number one, but let's go down to just a real example and how it's so easy to perpetrate that game longer, right? And so you have, let's take airlines. You could be in any industry right now because they're all getting bailouts. But take an industry, the airlines, which have bought back stocks like crazy and record profits, and kept no cash on the balance sheet, right? But if you're the CEO of an airline, and the central bank has designed a system to say, I'm going to make cash worthless, right? I'm driving inflation. I'm going to make zero interest rates. I'm going to make your cash worth nothing. If you keep cash on your balance sheet, then you have a disincentive because you're losing money, right? And so what you do with that cash is you do stock buybacks, because if you don't, you're not the CEO for much longer, because every other company is doing the same thing. So it's an economic system designed to have this consequence. And then you have some sort of outside event, and there's no cash in the system, right? Because everything's leveraged to the tilt. And you have some sort of pin in the balloon. It could be anything. And then all of those same people say, all of these jobs go away if you don't bail me out. And actually, they're right. Right. So now the central bank is stuck, or the government's stuck. We got to bail these guys out and everything else, because we can't have all of these fail and everything else. And it's something that they created in the first place. And that keeps on getting worse and worse with every cycle. So that's what's happening, and it's structural. It's structural because there's no way to take interest rates low enough to drive growth that's faster than technology is declining prices. It's impossible.
In a way, I feel like the guys at the central bank, obviously a lot of clever people there, but they're not only stuck with this existing system, but the rapid rate of technological change is making it even harder for them to be able to adjust to the realities. By the time they wrap their heads around what's happening today, they're already a year behind. And maybe that's to an extent why we're seeing the rise, and at least in conversations around central bank digital currencies. But I feel like those just recreate the same problems, just in a new package.
Yeah, it's just a new package. It's a way because if you have a currency in a bank, what used to happen is you couldn't take interest rates too far negative, because people would take the currency out of the bank and they'd put it under the mattress, right? If you can take that into digital currency, you can take the interest rate to whatever you want.
Oh, it's so perfect. I never thought of that. That's so devious, beyond belief, and they can just program it straight into the money. Ah.
But again, all of these things, they're going to break. Technology is too powerful. We are going to have a deflationary environment. The only question is, do we have deflation first, then hyperinflation, and then deflation, right? Or like technology is too powerful force for central banks to stop. They will not stop it, no matter. Eventually, currencies break. What is the currency? Right? It's only trust.
Mm-hmm.
The piece of paper with numbers and faces on it. It's a trust and an obligation that you'll pay what you said you'd pay. And if you change the rules and pay me back in something else to pretend you paid me, eventually it loses trust.
That's I think what really comes down to is that, yeah, money is a belief system, right? And we've seen time and time again when that faith gets lost, when we see too much inflationary forces come in terms of hyperinflation, as we've seen in a lot of countries, things start getting very, very bad. I mean, it's the black hole effect, right? I mean, more inflation, more taxes, the debt that is completely unpayable, and eventually you'll get some kind of a supernova explosion situation where it all just explodes like that. Now, in terms of trying to survive in this kind of economic reality, what is an investor to do? Where are the assets that people should be potentially considering in such a situation?
So I would say that the greater question for society, every one of your listeners, everything else, is, so I'll answer that question. But first I'd say the bigger impact to all of our lives are what's going to happen when most of the people aren't protected, right? And it breaks. And those provide real fertile grounds for revolutions, wars, world wars,
Mm-hmm.
and a really scary time. And when you go back in history, when this happens, it always sets up the next step. That's the more important question. So in game theory, we always care about our personal needs first, then our family, then our country, then the world, everything else. And what I would say is, we have to all be careful. Why I wrote the book is we have to look at it the inverted way to survive this. But in answering your question, so how do you put on your own oxygen mask first, right? If you're, mm-hmm. I know your podcast is a Bitcoin podcast. I'm a huge Bitcoin fan because it provides an alternative that is, in fact, it was out of 2008, right? It was created, but it provides an alternative that you can trust, right? And I suspect it's very highly probable that it turns into a reserve currency over time. So if I just thought about gold as a previous reserve currency, right? 10 trillion or so market cap, Bitcoin as maybe a future reserve currency at $150 billion market cap, $170 billion market cap, then they won't both be reserve currencies.
Mm-hmm.
So the asymmetric bet, the upside versus downside, is staggering on Bitcoin. Right? You can move it anywhere. You can so it's just more likely going to be a future reserve currency, and I like the chances on something like that cannot be manipulated. If it wins, gold isn't a $10 trillion market cap because of jewelry. If it wins, gold must fall. So for a while, they'll both do well. But over time, I think what's going to happen, because Bitcoin works on a network effect, I think the more people that are on it, it just explodes in value. And at one point, it just takes off. And I think at some point, there's a wave of central banks that have to peg to it that causes everybody else to. That's what I think will happen. So I think that's a good place. I think that's a good store of value. In an inflationary environment, then a good store of value would be real estate,
Mm-hmm.
right? But you have to assume that real estate you can't move, right? And revolution comes, everything else you can't move it. You also know in an inflationary environment, the government has to go and tax things at a totally different rate to pay back debts. So some of these stores of value are going to be attacked by governments for different tax rates. One thing I love, technology companies with network effects, right? And I won't get into network effects on the show, but have your listeners go and look up network effects and why it's so important. The internet is the largest network effect, and so are the monopoly companies on top of it.
Mm-hmm.
It's designed that way, and so I think about network effects in every company I'm involved in. And then where I spend my time on startups that have incredible upside versus downside, and people I love working with. So that's where I think about putting my stuff. But realize that a lot of the bets, if governments get away with it this time, right, and they create an inflationary environment against then you'll win on some bets and totally lose on the other, right? So if you saved cash waiting for the day that there's going to be deflation, and there's a massive inflation, you get wiped out. Mm-hmm. It's like binary, it goes zero, right? And the same thing on the opposite. If you don't save cash and there is deflation, you get wiped out. So that is the game we're all playing right now, mm-hmm. and those games are outside of our control. So in my view, if you said, how do you create wealth? You concentrate and get lucky. Or smart, right? Mm-hmm. So you trade everything into one thing, and you're right, or you get lucky in timing. That's what an entrepreneur does in a business, right? I'm all in, at the expense of everything, and if I'm right, I create tons of wealth. And then on the other side of that, you diversify once you've created wealth to protect wealth. So create wealth, concentrate, protect wealth, diversify. So I would be diversified across these asset classes and looking to say where the bets are. The bets that I like the most: Bitcoin, Bitcoin network effect companies, a little bit of real estate, and diversified around that, and companies that are early enough in a cycle that can create massive network effect, massive kind of monopoly power.
The stock market's interesting because there's so many amazing companies that are up and coming. Obviously, we've seen the companies that can't continue to innovate get left by the roadside of history, but we do see all these amazing tech companies that are growing to incredible heights, and new tech companies coming all the time with new innovations all the time, and technology is not going to go out of fashion. So that's perhaps a very interesting area for investors to be looking in as well, outside of those more hard assets like Bitcoin or potentially even gold. I mean, do you think that gold has a place in a modern investment portfolio?
Today it might, very little. I personally very little. It's gold or Bitcoin. And where I would say is gold has always been a hedge against this type of thing, and it's been a good hedge against currencies going out of control. And I think it will be for some time, but I think Bitcoin's more powerful and it has way bigger upside.
Gold could turn into another Blockbuster.
Exactly. Because if Bitcoin wins, right, which I suspect it will, gold has to collapse.
Interesting. Now, the final question here for you today. So, this current path that we're on, I mean, what is that the future in terms of, the future for our children? Are our children going to grow up in a world that is worse than the one that we grew up in?
Today, yes. Unfortunately, today, yes. I'm almost two minds here. I'm so excited about the technology companies I'm involved in, how fast they're growing, the type of people trying to create abundance in the world, and every leader I'm working with, every CEO I'm working with, and helping drive their companies, they're trying to make a better world through technology. They're trying to make sure that technology is out to a whole bunch of people, and so it's not technology that is the problem. It's not those leaders that's the problem. It's a system rigged against that is causing the problem. So on one hand, I'm wildly excited, and I have an obligation to say how fast technology is moving, right? Because I'm one of the beneficiaries of how fast it's moving. And if we would let that happen, I would actually be less of a beneficiary, right? It wouldn't move at the same rate, but the wealth transfer wouldn't be as much.
Mm-hmm.
And what would happen is that wealth transfer would be shared across society. That's what I want to happen. But for that to happen, monetary policy has to massively change. And it's going to change no matter what. It's going to change. Bitcoin might be the thing that makes it change, right? And it just drives it but we're going to have to go through a tough time no matter what to get there. But it's not, in times like this, you'll see it here. Bitcoin against gold, this against this, this against this. Bitcoin and gold are the same. They're the same family, right? Of different ideas of which one's going to win. But they both of those camps believe in sound money.
Mm-hmm.
Right? So there's way more in common with those camps. They shouldn't be fighting than in common. But in a world like this where it's so divisive because people are so scared, and what are they going to do? What are they going to? I'm going to be able to feed my family. I can never buy a house. What's happening is, and it's easy to create more division. Right? It's easy to say it's those people over there that are creating that problem for you, and that's what we're seeing in politics all over. And so the biggest thing in that is you need to check what is true, right? Is it? It's not those people. It's not this. We're in a system that is untenable right now. Those two forces competing against each other, it's untenable. And just about all of the noise, all of the other noise is on top of that.
And in the end, I feel like we have this unstoppable force, which is technology and innovation, which is revolutionizing everything that we're looking at, from the way that we communicate. I mean, what we're doing right now wasn't possible when I was growing up, to the terms of our money and everything else. It's the technological forces will not be stopped. The Pandora's box has been opened, and we're moving towards this situation. The question is, in order to get there, what do we have to go through?
Yeah. And that's it. And hopefully conversations like this, what you're doing and everything else, can train more people kind of what's really happening underneath, so they can ask better questions, protect their own portfolios, but more important, when they hear something that doesn't match what's really happening, they can question, right? They can question it and inform more people. So keep doing what you're doing.
Thank you so much, Jeff. Really, really appreciate your time today, coming on and just sharing this excellent knowledge with everyone out there in the audience. Again, everyone who's stuck around as well, make sure you check out the book. It's The Price of Tomorrow. There's a link down below where you can check that out. Jeff, thank you so much.
Thanks a lot.